Welcome to the Business Finance Matters podcast. Over the next 15 minutes, we're going to tackle some of the topics that we get asked about on a regular basis so you business owners can get a better understanding of what it is that you're probably dealing with on a day-to-day basis. Let's get on with it. So on this episode, Trevor, we're talking about cash flow management in particular. This is probably one of the subjects that we get asked about more often than not because obviously cash is king. If there is no cash, potentially you've got no business. Many businesses fail because they haven't got any cash, etc., etc., etc. So today, in 15 minutes, hopefully we'll be able to cover some of the most important topics around cash flow.
I think you're right. It is a much used phrase. It is the lifeblood of a business, literally. It is not just the cash itself, it is the management of the cash. What it's not, it's nothing to do with profit. Profit helps bring cash in, of course it does, but it's that absolute definitive situation about raising an invoice and getting it paid, but also manage that payment in against what you know as a business owner you've got to pay out. And it's manage it. That's what we're talking about here. It's, business owners don't take a salary. Business don't get paid on the last Friday of every month. It's not their payday. They don't, regardless of whether they turn up to work, it's not going to, it just doesn't happen that way. So the management of the cash situation during a business's life is absolutely vital. And it's not the lack of sales that kills businesses. It's the bad management of that inflow and outflow of cash.
Correct. And in my world, a number of times I've come across a company that I'm working with and they've come to me regarding cash flow. And guess what? They've come to me at the time when they should have been thinking about this 2-3 months beforehand. Sure. So what often happens, and I've seen it happen, a business has got to a situation. You mentioned invoices, which is a classic example. I've got a company at the moment I'm working with where everything's going smoothly, or it was. Now they've got 3, 4, 5, 6, 7 invoices going out. Their terms are typically 14 days, but guess what? They're not being paid on 14 days. They will get paid, of course, but these aren't the sort of customers that this particular business can ring up and say, guys, you haven't paid me yet.
And of course, you hit a nail on the head there, Dave. The reality is if businesses are leaving it late, it suggests two things to me. One, they're not planning properly, and two, they don't understand how cash flow works. And, if you break it down into your household budget, yeah, that's often the best way to think about it. Roughly as a household how much you're going to spend on food, how much the mortgage is going to cost, or the rent increasing these days, keeping the car on the road, blah, blah, blah. You got a rough idea, But equally, you then know, you might say to your partner, girlfriend, boyfriend, whatever, let's just rein it back in a little bit on the entertaining this month, just to build up a little buffer because we've got Christmas coming. It's that type of mentality.
It's a good analogy. It's one that was running through my head as we were speaking. From a personal point of view, as you quite rightly said, we have X costs, fixed costs, call them.
Yeah.
The mortgage, the shopping, whatever it is. But especially at this time of year, which is coming up to Christmas, from a personal financing point of view, we know there's going to be additional costs. So you're quite right. There is a similar model, but the management is the key thing here, isn't it? So we know as a business there's going to be a cash flow pinch, potentially, especially if you're growing.
Yeah.
I mean, the growing businesses are the ones that tend to be. There's an expression called overtrading, and that typically comes around where you've got the orders, which is great. You've got the widgets going out the door, which is great, but you don't have the cash flow coming in to restock the cupboard for raw materials or whatever it is. And guess what? You get yourself into a situation where you implode.
But Dave, it's a recurring theme, isn't it? It's about forward thinking. It's about planning. It's about, what do you want to do? You hear market people talk about, sell long and say short or whatever the phrase is. But the point I'm making is you don't want to leave what you owe to people to the last minute. But equally, you want to get what you're owed in on time.
Correct.
So that's an interesting part of that clear. When you're negotiating terms of payments due to you with your customers, you got to make sure as you can that they're going to pay you on time and what the penalties are for not paying on time. I know, and I've seen in my life and businesses, they'll actually offer small discounts for prompt payment.
Yep.
You know, there's nothing wrong with that because, again, it's keeping that cash in the business. I mean, changing it slightly. I mean, when it comes to financing is just a way of helping to manage that cash flow. It can be used as a buffer. It can be used to fill a gap. But if you don't know about that, and if you're leaving it to the last minute and you're panicking and burying your head in the sand or wherever it may be, that leads to a very difficult situation that makes you vulnerable as a business. Talk to me a bit about that, about leaving it. You've had some experience with that recently, haven't you? Where someone came to you, I think you mentioned it earlier, someone come to you a little bit too late.
Yeah, I think, I mean, businesses classically have, they don't always have finance controllers, finance directors, whatever you want to call them.
Yeah.
They're too small for that. And you normally have an individual or individuals, and their primary focus is,
Yeah.
as we said a minute ago, keeping the business afloat. It's got fixed costs. They also want to grow the business. And if they're not growing, and they certainly want to maintain a level of income to ensure that it can continue to trade and can trade profitably. But the area that I see more often than not are those businesses which I'm talking to that have now started to reap the reward, whether it's a period of research and development, whether it's a period of sales, whether it's a period of marketing. But what's starting to happen now is they're starting to get the sales in, which is great. I mean, as a business, the order comes in, you ring the bell, metaphorically speaking or not, as the case may be, and then you've got to finance that. You've
Yeah.
got to. So, what is it that you're selling? I mean,
Yeah.
I've got a number of businesses at the moment that sell a particular product, but to make that product, they've got to buy in the raw material. They've got to
Yeah.
pay the staff.
Yeah.
And then got the logistical costs. So then got to get the invoice out, and then they've got to get the money in. So it's a cycle.
And if you think about it, Dave, businesses should treat their cash flow as something that is, if it's not managed correctly, it creates more problems than what they had originally. So they need to plan. It's almost like a blend of solutions. It's not just about sales invoices, sales invoice. Yes, of course, we want to sell product. We want to sell a service. We want to do whatever it is that the business is set up to do. But if you've planned properly, you can see, where, as I was saying earlier, where there are gaps in that cash coming in and the cash going out. And it's trying to smooth out those ups and downs. And like I heard someone say only this morning, sleep at night. How many times have you heard that? Someone say, I just want to sleep at night. I want to get rid of the worry. I want to get rid of the pain. And it is painful running a business, isn't it?
So then we get to the situation where businesses can do all that they can do in terms of cash flow management, and then something happens. Because guess what? That's business, right?
Of course.
Things happen.
Yeah.
You least expect them to happen, but that's life. It's business. So a situation I can think of at the moment where this particular organization has done everything right. They've done all the initial work to get the businesses they're looking to get into in terms of they're basically management contractors. But the businesses that they've won this contract with aren't ready to start yet. And that's classic, that they push the start date back. And guess what? A cash flow pinch, as I keep using it, has occurred. And that's where people like, the members within the guild, again, have value. So in this particular situation, because I was involved with this from the beginning, we've had the phone call. He's explained the situation. He's explained that this has happened. We've had a chat. We've gone back to the lender. We've explained that there is this situation. The lender's going to support, which is great.
Yeah.
If this business didn't already have a lender in place, but has got a cash flow pinch, then there are products out there that can provide short-term, medium-term, long-term cash flow support solution, which is something else that we as guild members are always looking to provide. So you've got cash flow, either you've got a cash flow situation brewing or you've got something occurring now, but whatever it is, again, if you speak to us, we can get our head around what's going on, and we can either find the short-term fix if that's needed, but there are other options out there. Invoice finance, of course, is one of the most popular ones, but there are other types of cash flow products out there that if the business is aware of them, the overdraft used to be the obvious one, and that still is around to a certain degree, but if we can get into that business, make sure we understand the cash flow situation, we will be able to find, in most cases, a result to that
and
situation.
that's really important, because cash flow management, I mean, I'm going to read it because I think it's important to say this. It's understanding first and foremost what your cash flow cycle is. So that's that correlation between money coming in and money going out. Yeah. It's keep a cash buffer. You know, don't empty the tanks.
Rainy day money.
Rainy day money. You know, maybe Victorian, maybe what your mum and dad said to you, said to me. There's nothing wrong with that. In business, it's vital. Here's one for you. Be careful with your customer concentrations. How many times have you seen small businesses? I think we were talking about one not so long ago. Got a massive order in from a big global company, didn't they?
Yes.
Which was great.
Yes.
But that in itself caused a problem, because he had to gear up, he had to staff up, he had to get raw supplies in and all the rest of it. Thankfully, you found a solution for him. So be careful on your customer concentrations. Again, don't put all your eggs in one basket. You know, another phrase, get paid faster. Be careful what terms you're agreeing with. Yeah, part of selling is both parties walking away with a smile on their face. It's not about, you know, just I've got to do everything, get a sale. If I don't get a sale, I won't get the money. And the customers ask me for 30, 60, 90 days. Well, hold on a minute. Can you afford that as a business to give those terms?
You know, one of the challenges, and I see it happening time and time again, it's something that's spoken about quite a lot.
Go on.
Certainly at government level.
Yeah.
Is what businesses can't do. It's very hard. And I mentioned an example earlier. Your terms are 14 days. Their terms are 30 days.
Yeah.
It's very, very unlikely, depending on who that customer is, especially if it's a big one, that you're going to be ringing them up and saying, if you don't pay this in 14 days, what are you going to do? Well, they won't. And the fear is that because you built that relationship with that customer, if you start going onto the phone, there's nothing wrong with doing that, by the way.
No.
But you don't want to upset that relationship.
Correct.
And that's where the balance is.
And this is what we mean by cash flow cycle. It's understanding who your customers are. Yes, collect your money in hard. Negotiate terms for yourself that are of benefit to you. You know, the cash buffer we talked about. And control your costs, Dave. You know, that's got to be important as well. You know, you can't go, oh, we've just got this invoice paid and spend 90% of it on the Christmas party. That's not going to work for everybody, is it? So, look, what have we got to remember then, Dave, on this one? What are the key things?
Well, cash is king, and we mentioned that before.
That's what it's
cash
all
flow
about.
management, you know, looking what's going on in the future, making sure that there is a rainy day backup support, being VAT, corporation tax,
correct.
All these things that I know that businesses in general will struggle with if the buffer isn't there.
Yeah.
Making sure that the management's in process, and as you said a minute ago, how can I get my invoices paid quicker, and how can I work with my suppliers to make sure perhaps I can get a little bit more time there?
I agree.
So that it's the whole process of management.
I agree. And I'd add two important things to that. Watch your customer concentrations, because if they're going to have a problem, you've got a bigger problem. So if they can't pay you, you're not going to be able to pay your bills. Grow by all means, but control your costs.
Grow carefully.
That's very carefully. Well, do you know what? I think we talked a bit of sense there for a minute, didn't we?
Maybe. So, how to get hold of us, Trevor?
Well, look, you know, pigeon, post. No, seriously. The Guild website, get hold of the colleagues that Dave works with and collaborates with collectively. They do a lot of work together, a lot of good work for businesses. Get straight onto bfpguild.org.
You can email us at podcast@bfpguild.org.
Mate, again, you surprised me. But listen, on that note, anybody listening, anybody watching, if you want to ask us a question, just pop it on there.
Yep.
And we're happy to answer. Hopefully, be a polite question. Dave, it's good to see you.
And you, mate. Look after yourself.
We always seem to be going off to the pub after these, don't we?
Let's go.
Let's go. See you, mate.
Thanks for joining us on this podcast. We hope it was useful. Please share, please subscribe so we can share this content to as many business owners as we possibly can. And if there was anything we haven't covered in this particular episode, then please let us know. Drop us a line. We'll be happy to talk about it in future episodes. Thanks again.